Hello and welcome. Today's date is we're entering the 19th day of February 2020. It's 10:09 p.m. Eastern Time on the 18th day. But by the time this is uploaded and the fact that it's already the 19th day on one side of the world, then I'll just name it as such. And you could be watching on the 24th day, although probably not. All bets trades of the like, that's within each's own risk and their own reward. But I want to start off within the Dixie, DXY, or the US dollar currency index. Because a lot of the setups in precious metals, that of gold and silver especially, are looking pretty good, and yet the dollar index is breaking out on a bullish level. Usually it's a contrarian thing. If the dollar is going up, then usually gold and silver prices go down against the US dollar and vice versa. And we're seeing how maybe this thing can start breaking out into levels not seen since 2017. Anyway, let's take a look at silver. We'll start with the daily time frame and show so many days going back into 2015 for the last half decade. And choppy, yeah, most certainly choppy. And upper range 21, we got a lower range at like 14, and we've crossed past the middle mark maybe, but still a long ways to go to get to 21. Do we not? I mean, 18 and a quarter. Okay, well, as it is. The session on today's movement, or for that of Tuesday, was a statement of breaking out. And these lines, it's just luck how they just keep on resisting and supporting continuously over and over the level that they do. We can see that we had maybe a little bit of resistance today. If we move this onto the hour time frame, this is where it gets very interesting though. And we did have resistance there. Piercing below first on 11 o'clock in the morning. And then pretty much hitting it exact, maybe exact. What's the high? 1823, hitting it exact at 1500 hours, 3 p.m. So all day today. So from like all afternoon, from 11 o'clock from the move. It consolidated through time to 8 p.m. And then things changed the previous hour at the 9 p.m. stamp, where we have a most significant higher low to the previous ones. We yet again matched the previous high, which was a very large pierce above the last one. And so far, just 12 minutes into this hour, it's consolidating very nicely. To me, this is looking poised, ready to break out above this level of resistance. And when these things have moves, are usually pretty darn near good. And I wouldn't be surprised if, as we move into the session, that things are going to probably go up. Now, I don't know if there's any economic news or anything that could help or contrary to the fact. But with the test in here, it looks to me as if we'd have a retest of the previous high at 1876 as its next target. And then after that, these lines at 1909, 1930, they are very much short-term resistance levels, extremely short-term, as I'd be looking for the next key resistance to come in at 1958. I'd look at this like an inverted head and shoulders pattern as well. Now, what do you call the neckline? Is the neckline this Fibonacci or the one above it? I mean, left shoulder here, you got the head area here on the right shoulder in here, but I see this breaking out above the 18 average of highs nicely on the daily nonetheless. And I think this is poised, ready to have a decent sized move. And whenever you have a situation, key low here, and then you have a high, most certainly a higher low. In fact, it doesn't even go down to the 1613 fib level, which it kind of should have. This was like a failed break. Why? I mean, this was all points were leading to it on December the 6th. Didn't happen. And from that failed breakdown and that interesting situation in there, because of that, this is even telling me that I wouldn't be surprised if this thing not only gets to this high, but it even violates it even further. Is there anything on the longer term to state that fact to be true? Let's take a look next at the, we'll go weekly term time frame. And then seeing that choppy action I showed on the intro, this little bit of sideways stuff. Well, again, how do we see it with the 18 in here? And it looks pretty darn near spectacular. This looks like an excitation of this amazing sideways consolidation that we've been having. And what makes this different from the last time is when it was breaking out from the 18 average of highs here in December 30th and January 6th, it was already well overextended from below the 18 lows. Here we are lifting off from semi-flat to barely rising 18. And this thing in here looks like it's probably ready for leaving this significant moves higher. That's what it seems to me on this. And then in viewing this on the monthly chart, this is where it looks just fantastic. At least in my point of view, it's almost like take a picture if you're trying to draw a textbook about teaching, especially with all this whole 18 average and stuff in here. With everything that has been going on, and even just these last couple periods in here, this looks like it's working on leaving this congestionary level with the newly rising 18, not supporting the lows, supporting the highs. You can call that strong as it is. We're doing so as we previously had resistance in this range in here. There's a lot of this empty space, retracement mode. To get to previous high at $50, well, to double, we have to go to 36. And then to get from 36 to 50, you'd have to get like 14. So you'd have to have like a not double once and then a 40% move after that. But if this, to me, isn't screaming out the probability of at least starting to at least work towards filling some of this, and it looks obvious to me. We'll see what happens. And on the quarterly chart, again, this is just another interesting situation in here. For we've had, from this down move, you come down, fill this low to this one, and well, this matches this high. Of course, we've talked all about that in the past, 1980. Not going to talk about that in this video, but this is showing the early signs again that this is ready to probably start to break out. And you can see in previous times it attempted to do it here, and then that happened. Of course, before that, attempted this one in here. It was a failure, but it successfully corrected. And in these stages in here, you establish resistance. Okay, correct. Are you able to get above? No. You get above here. Okay, great. You're able to get it back and test it? No. You get in here. You can say this was a bit of an attempt in around 1993, 94 in here, but obviously really not getting above resistance until, of course, this one failed move, successful move. And then we have in here, this we'll see, this will be the first attempt on this time frame to get it going. And of course, on the monthly chart, this would be the second attempt, because this was the first one, and this has just been a long, wicked sideways consolidation. And these long ones like this, when you break it, I think it's more likely you have more larger moves up than you have larger rate of ascents than you do of lower rate of ascents. And before going into gold, let's just take a look at silver against the Canadian dollar, which on its monthly time frame showing a very, very beautiful bullish setup, and on the daily chart, this to me looks poised, ready to go as well. This the movement, as I show the dollar index, shows that this is a global precious metals increase more than anything. I think that's what it indicates to me, and I think that's very cool. I think as this could be a start of a very good sustained run, I think, in precious metals, but time will tell. I think it will. But anyway, let's take a look at gold. We'll take a look at it against the Canadian dollar, then the U.S. dollar. And on the Canadian front, it's pretty good, 21.22 at levels not seen since ever, all-time highs. As the last time, when was the highs, all-time highs created? It would have been created somewhere around 11:20 earlier today. I think those highs will be taken out relatively quickly. We'll see. We've established a sideways range short term. But anyway, let's take a look at gold on... and a lot of other currencies are seeing gold at all-time highs as well. Not the U.S. dollar. As I brought this... As it's up now on the screen against the U.S. fiat. And well, it's now getting back to levels seen back in 2013. So 7-year highs. And actually, technically, it's... the highs are January the 8th. So it just shows you the currency value of the U.S. versus the Canadian right there. This is yet opportunity number 3. I call it opportunity 3. Can you see the other two? Number 3, this is here. And the opportunity is this amazing bull, amazing run. The last 2 failed. One had a successful correction. I guess the other one did as well. The first one was, we can see in here, it was showing this 18 average, and there's a breaking out January 24th and then the 27th, but it comes back down, which is normal, like higher low stuff. Okay, so now it's doing it again in here, and not so much. But from this low, we get into the band. Do not escape it to the downside. Obviously, holding the lows is the important one. Breaking above the highs is where the resumption, and that's what we can see occurred in today's session for February 14th on the end of last week. It got here, and then Monday's session, Monday, I know it was a U.S. and Canadian holiday, but I don't think it was in Europe or in the rest of the world, but maybe I might be wrong, but it was a North American holiday. Still, with that being said, it paused a continuation higher, exitation of the 18, and it's like a double bottom type. To me, it's just a magnificent pattern. So to me, it looks like we should have me approaching a concise, probably a sharp, quick move, piercing above that 1669 handle that I've been talking about for quite some time. When we take a look at this on the single hour term time frame, it had a beautiful move, just like silver. It's just been consolidating through time. Support has been established at 1600 even, and resistance. I suppose I should take a look at this maybe on the 4-minute to see resistance support more clearly. You can see here multiple times hit at 16, like 3 or 4 or 3. Resistance, a double hit, not 3 times hit at 1605. We can hit once, then again twice, and it pierced below here. But the next layer of resistance we can see is around 1602, like whatever. But it's just in this sideways consolidation. And like all of these times, you have a big, that was just a beautiful, concise move higher. But from that point, you either break this support, you're probably going to go down quick, 1593, decent sized red candles almost all the time. And then breaking above the resistance and having all that type of stuff, like all these other ones in here, you have a great size move. Let's then moving on to the longer term time frame and via that of the weekly. And we're going back to 1980, since before 85. And there's the sideways downward moves, obvious kilo here. Well, I guess you can say, no, I guess can't say obvious. There's 2 kilos, either this one or this one. Pretty much both the same. But from this low, just obvious move to this high, obvious move to this low. And there was that inverted head and shoulders pattern. It's now been breaking it, and it's doing its thing, because you can talk about patterns and what they're supposed to do, and then the patterns take time to develop and manifest itself, and that's what this is doing. And that's establishing a breakout from the neckline of the inverted head and shoulders pattern. We can put the neckline somewhere around in here, and well, it's been in this move. We see it's correcting well, getting above the 18 magnificently from the last little bit. It's had up moves, but on low volatility. So with the high in here, this thing is poised, I think, to have decent sized green candles, I think, moving forward. And let's take a look at this next on the monthly, and it's just a magnificent setup on here. Let's just take a look at, there's all the other data here going back. Well, not all of it. Good amount though. And in this, just the 1, 2, 3 candles up, sideways consolidation. Now we're on like from this low 2 candles. We can see we've corrected within this month. We're past the midway point, 9 days and 19 hours to go in the month as I'm doing this video. So this is now breaking out in the uptrend. So to me, as I've been stating, okay, going to this high, probably going to be weak resistance. Maybe we resist it a little bit, not at all. Maybe weak resistance is small pullbacks, maybe a deep pullback, but long term, that's not much, 1380, but even 1550, that type of stuff, possibly. But given how these things can go, I mean, we could even break this rate of ascent on this next leg higher, as the rate of ascent was something like that. Maybe we do something like this. Well, not like that, but something, well, that's lower. And, well, there we go. That was a higher, but yeah, something of a higher rate of ascent than that. Is that possible? Is that even possible? Well, it's definitely possible. Is it likely? Well, I won't answer that, but it wouldn't surprise me if, this thing, you know what's hit the fan and things are ready to get going. And on the quarterly, there's the excitation on April of last year, and it's just been, okay, green candle up. You know what? Yeah, technically a green candle up, but we can see in this that this was an inside quarter, which meant the high was noticeably lower than the previous high. And it doesn't have to be noticeably, but it makes it more legit if what it is. And the low most certainly was noticeably higher than the previous low. So it's a legit inside period. This one was. And usually those types of patterns follow through within the trend, and this one being no exception. We're in midway through the quarter, February. We have 41 days, 18 hours to go. Who's counting? I'm not. Although I'm just reading it off. That's not counting. And we've already barely broken above it. This is just... This thing could end up closing up here. And even if it just has a small little bit, this thing is in this type of uptrend. Are we going to continue this rate of ascent? And, well, it wouldn't surprise me that to be the case either. But at any time, this thing, it's like yellow alert that we could have any given week or month where, oh my goodness, can you see? I can't believe what's happening. Gold's up like 20% today. Maybe not to those degrees, but up to the levels where we have moves that are just so fantastic. Uptrend lines are breaking. That type of stuff's going on. Anyway, that'll be basic. Actually, do I want to ratio yearly term time frame? This is. I know I've got so many periods on here, but it's worth showing. It's worth talking about. We'll do the ratio after it. We'll finish, and that'll be it for the video. Heck, we're not even at 20 minutes. It feels like I've been doing it for 23 or 24, so no problem there. How this is playing from this move. So you have, I know you don't have the 18 here, but we can see that, I mean, this was obviously in an uptrend. Gold was like $35 way back when, $20. They devalued it in like 1933, I think. Well, they devalued your money. Well, your grandfather's father's money, maybe, or whatever. Or maybe your father's or whoever. Not you, though. With that being said, we have this high. We have this correctionary move. And, oh, okay, so we don't break down in here from this level when it could have. It gets this pause period here on the 18, and then there's the, okay, looks like it's going to break at 1, 2, every year's up. Okay, yada, yada, whatever. And then we have 3 years down. One really pause year, but 2 significant years down with, of course, this one, a 28% year taking the cake. But since that fact, it's done nothing but showing strength amongst the 18 average of highs for the last half-plus decade. But last year took the cake when it had excitation of it, and now we're having follow-through with 316 days and 19 hours to go until the end of the year. Who's counting? I'm not. I'm just reading it on the right-hand side. And I'm using a new browser, actually. The browser is Brave. I actually like it a lot better. And I'm not a big fan of Firefox, Chrome, or Edge, actually, so good time to have it come across. Anyway, The only thing is that the problem is that the font is kind of small on here, but it comes up pretty fast anyway. Nice setup here. Oh yeah, gold to silver ratio, so I might as well show it. Because I was actually, what I forgot, I was going to say, yeah, yada yada bye bye kind of stuff. And I can now hold that off. And where's the ratio? I got a bunch of them on here, like this one here. I got a bunch of lines on here. I don't even know. It's been so long since I've looked at it. We'll just see if it's luck that they're hitting or not. Because oftentimes they hit, and it's only luck when they do. Well, there's nothing stopping this right now from going down, and I think long term, this thing is not going to go down this low, but it's going to even break down to, I think, not only do I think go down to 10, but I think go well below 10. That's aggressively, well, we wait and see, and it could take 20 years even for that, but I would think it'd be quicker. Well, you got this green candle up the sideways, and then the way it's just been grinding its way higher from this resistance. This in itself is a bullish pattern, but let's just take a look at this. Let's go to this. Let's just skip right to the monthly chart. Hasn't broken down the uptrend in here, but we've had some interesting daily size movement because it was last year where this had the huge consecutive days, and on a bearish level, it successfully corrected. And then on a much even larger, better, well, not much larger, but larger and better move on the sequel. And from that point, in correctionary move, it took 2 moves to go from point A to point B. It has made 1, 2, 3, 4, like 5, 6 or so different highs and almost the same amount, a bunch of different lows. And it's filling empty space in its correctionary mode, and it's really correcting like 3/4 of it. Hasn't failed. Now I've got the correctionary mode from this to this if it's going to break down, but on daily session, it did follow through with these consecutive red days down even further, with, of course, silver having its better day. I mean, it's got a long ways to go regardless to change any of these long-term trends, because we got this level here at 80, and even then it's got so much. And then getting to make new highs, well, it's taken so many higher lows, higher highs rather, and higher lows, to do what it is, that it could take even 2 or 3 more just to get to the previous high. It's just been one of those long kind of things kind of deal. Anyway, Fibonacci lines aren't even hitting. And the fact that, and I actually like to see this because they kind of hit way too often as it is anyway. Because I always say, oh, it's only luck that the Fibonacci's hit. Well, technically speaking, I mean, that kind of isn't hitting. It's well lower. And they usually pierce extra, although maybe I say that cryptos pierce extra. Because technically speaking, I guess, no, it would be this. I was going to say if you reverse it, but it would be the same, piercing less. However, I think the final thing I will note, though, as far as technical analysis is concerned, when you have an uptrend like this, you go up like this, you come down, and here you see on February the 12th session, the day there, we're leaving the 18 after having this good correctionary mode, and it doesn't even go any higher. It makes a lower high to this, which is fine, but you got to make the higher low to here, and that didn't happen. So the must-hold area of around the 88 and change area didn't play. As they say, the follow-through from the decent-sized red down day is a concern point. It tells me that there's red flags. It's going to go lower. It is a little only little overextended on the Dow point, meaning if it does go lower, maybe we do have a little bit of a lower high rally up to 88 or whatever. But to me, because of this lower high move, the way it looks like conservatively on a minimum level, I guess conservative is a good word too. This goes down to 86.5. Thank you for tuning in. Have yourself a great day. Bye-bye.